Good morning, guys. Third time going live. Let's see how this works. All right, let's get right into it. Welcome to another video brought to you by Total Control Traders. First things first, SPX. If you haven't watched the video from last night's recap, make sure you go take a look. I am still bullish, but now taking some precautionary measures due to the multiple red flags that we are seeing. Potential red flags, first being this bear volume that came in yesterday morning. Not significant, but sustained. Okay, so that is key. Even though it's not significant, sustained. Second one, lack of bounce. We did not see the V-shaped bounce that we have witnessed multiple times before. We could very well be seeing what seems to be the similar action from back here. But another thing is, after a breakout of this previous high from the one-to-one extension rejection, it has me a little bit concerned. And let me see if I move this. Yeah, this one-to-one extension rejection has me a little bit concerned due to the fact that there was a lack of follow-through and a lack of follow-through from this long-term upper trend line breakout, and we sort of just went sideways kind of thing from there. Then we broke down right after. Now the chart is a little bit messy right now due to, let's clean this one up. No, let's leave it. The chart is a bit messy right now because I'm trying to determine what are the key points. Now obviously this GP is still the key to hold, and we can see right now we are just about losing the trend line, which is still okay because we lost it back here, got bought up right away. So give it an hour. But regardless, GP is key to hold. This low from yesterday's after hours, 3917.9, is the key to hold. From here, what we're looking at, I decided to extend these two trend lines from this long-term wedge back all the way to November 16th. This long-term wedge that we were tracking, this rising wedge. So I decided to extend the trend lines to see whether there is still reactions, because even up all the way till this last time that went full bullish, we were still seeing reaction to that upper trend line. Not so much of the lower one. The lower trend line has now become the upper one because they've crossed. The upper trend line is now the lower one. Okay, we are still seeing a little bit of reaction to that previous upper trend line, now lower trend line. We can see a bounce from here, the trend line, a bounce again before breaking down. Now we are seeing a slight rejection from that trend line again. We'll likely be deleting this lower trend line, but upper trend line seems to be still serving as support resistance. So gonna keep that there for now. Now let's take a look at both case scenario. What happens if we're a bull? Now the other reason why this GP must hold, because that is where the daily 8 is. If we're to lose and close under, we'll be exiting majority of my bull positions. Have exited most of my bull positions already due to the fact that there are red flags, multiple red flags that's showing up now. Daily 8 must hold today. Today is key. Okay. Say if there's bear, let's go with the bear case scenario first. What happens if this marks the top? First zone that we'll be looking at retracing back to. Let's see if there's any confluences. 0.38 lines up with this previous high, the one-to-one extension rejection. And let's delete this. right there, the lower zone of the previous resistance, 0.382. If we're to lose the daily 88, we'd be looking down first zone around that 38.50 mark. And I'm seeing a multiple confluence. I don't imagine that we will lose all that much. What is this? It's too many drawings. I don't imagine we're gonna see a negative 4% day today, but very well possible. So keep that in mind. Last time we saw a negative was minus 3.6%, so very well possible. If we do lose this GP and lose the 88, we will be looking down first level 38.50. From there, the GP that we're looking at is in confluence with long-term trend line dating all the way back to pandemic. This is a key trend line. We can see since the bounce, there's been another bounce here. And since that last bounce was from the same spot too, basically to the penny. So if we lose the 0.382, we'll be looking at this, a bounce from here. Well, I want to say guaranteed, but nothing's guaranteed in the market. Put it this way, if we were to come down here, confluence of previous support, trend line, and GP, I will be entering bull. Yeah, previous support resistance for sure. So triple confluence, loss of GP, we'll be looking at this zone. Most ideal entry for bull plays. Okay. And market is going down. Just about to lose that GP right now. Must hold. 39.17, 39.18. 5 cents off. And lost it. Alright, that confirms it. Loss of this trend line. Very likely. Don't imagine we're going to see a big lower wick from here. So, very likely a loss of this key trend line that we've been holding. And now we are looking downwards at first level 38.50. So I have exited majority of my positions, at least the big ones. Not going to be concerned about this one. Still holding that 88. Based on the pre-market volume so far, let's take a look. Pre-market volume so far, noticeable. Comparing to yesterday's open. Okay, still notable volume, notable bear volume. Yeah. Looks like we're seeing a little bit of a bounce, but regardless, trend line has been lost. All right. Let's take a look at VIX. Seems to be getting walked up by the 5-minute or pre-market. Yeah, so we are still trading over 20 on VIX. And US dollar. Still could be a right shoulder. Just about to break that key resistance. At 91, can't see it. 91.01. I think that's why we're seeing a rejection on US dollar and a slight bounce on the market right now. All right, let's take a look at the hottest tickers. Tesla. First one, breaking under the trend line. That's this could very well just drag out. Still haven't lost at 780. This 780 is key to hold. We already lost that key trend line. So overall, looking bearish on Tesla. And next, NVDA. Still looking bull. This is a strong ticker. A long-term sideways action since August of 2020. This should continue to see follow through. Watch for signs of relative strength. We saw a slight bearish divergence on the 4-hour yesterday on this new high, and now we're about to correct it. So from here, what I'd be looking for is a bull flag setup, waiting for that 8 to catch up. Ideally, we see a back test of this previous high at 589, which is likely to line up with the daily 8. That would be an ideal re-entry. 589. Next, PSTH. I'm seeing a decent bounce on the market right now. See if we hold that trend line. We'll go back to it. PSTH pre-market up. That's good. Relative strength to the market. Huge bull volume yesterday. Let's see if we get that follow through today. This ticker looking amazing. Last time. Okay, so this is already played out. This is already rejected. This 1-to-1 extension target has been reached from the last lower low, higher high, higher low. 1-to-1 extension target reached, rejected, came back down. Let's see what the next target looks like. All right, likely to reach on this one. We're likely to reach that at the very minimum 1.618 target. That's what I'd be looking at. 35.41 on PSTH. Chart is looking bullish. We want to see that follow through today. Might not be ideal given the current market environment, so might make it a little bit harder. It's always the worst when you see something like this. You know, your ticker is finally ready to go, but the market is not participating, or vice versa, depending on which one you're playing. So with this one, just be cautious what the market is doing. As long as you even, let's say the market is pulling back, and as long as the ticker is going sideways, even if it's just going sideways, that in relation is relative strength to the market. So be patient. Remember, the motto of this channel is patience pays, persistence perfects. Next one, FSR. Flat open, that's good. Extended from the daily 8, spinning top candle. Lack of bear volume. No divergences. No major red flags. This one, expectation given the market condition. Ideal to see a bull flag set up from here. Wait for that 8 EMA to catch up. There is lots of upside to this ticker. FSR, Fisker, I believe. Yeah, Fisker. We'll be looking at adding to the position. This ticker, this chart is very strong. Look at that volume, bull volume. On this move, upon the higher low, we'll be looking at a break of the higher high. So where we're stalling right now is right at GP from this last move down. Rejecting from it. Very nice consolidation so far. Next, Zoom. Sorry, I could keep looking over, just keeping an eye on the market, make sure we're not going complete bearish. So far looks okay. A little bit lack of follow through so far. And Tesla is just about to lose that 780 zone. All right, next is Zoom. Nice flat open so far. Just what we want to see. This is the one position that I haven't trimmed all that much yet. Okay, yeah, my trend line looked weird there. Yeah, this is the one position that I haven't trimmed all that much because essentially we are in that gap fill territory. We are looking up at 460 as a first target. From there, we'll be looking up next target at GP. But upon the reach of this gap fill, I will be trimming more or taking more profit. So this chart has paid us very well. Now, one thing to keep in mind in this environment, as I mentioned in the trading group, is there's a couple ways you can deal with this. You know, upon this, any slight signs, just depending on how active you want to be, upon any slight signs of potential pullback, what you could do is profit take and then look for re-entry. However, that is what I'm doing now, given the break of the trend line. But the other thing that you could consider is, you know, when you're in the gap fill territory, you want to make sure, whether if you take care, you're looking at further upside. The reason why I didn't take all the profit off of Zoom is relative strength. And that's why I keep emphasizing, you know, relative strength during market consolidation. This Zoom kept up against market consolidation yesterday fairly decently. We can see that the candle is green with decent bull volume. So I decided to keep quite a bit of a position in Zoom to watch for that ultimate target of gap fill. Right. So the psychology of market consolidation is know where your entries are, know where your breaking point is. Remember, for those of you that haven't seen what I shared on Instagram, oh, by the way, we started an Instagram group not too long ago. On Instagram, I said that this is the breaking point of bull thesis. Okay, as we came down yesterday, this is the must hold zone. From there, we started seeing a bounce. The bounce is still lacking right now. Okay, this is a good sign. Although we lost the trend line just a few minutes ago, we are still holding that GP. This is the last hope. GP must hold until it bounces over this GP, the reverse GP of 39.50. I would remain lesser position on the bull side, just to be cautious. But once we get over this GP, we'll be resuming bull positions. No noticeable volume so far. Yeah, you compare these two, compare the candles, the volume pre-market so far. Bears are still clearly outweighing bulls. So watch for rejection at the 5-minute 8. Not extended on majority time frames yet. Essentially, this is a bear flag right now that's setting up. And one thing that's very frustrating is one of my positions is FNGU. It went through a split last Friday. I still don't have my shares yet. Like, come on, TD. It's making me consider the option of switching out of TD now. I mean, I can understand it's the scheduling of BMO. Perhaps that's why, but really, when you're trading full-time, the one thing that bothers you the most is the inability to trade due to brokerage issues. But yeah, it's Canadian brokers. It's fun. All right, let's get into some other tickers. First one, QS. Congrats, QS bulls. Congrats, and this is why we stuck with the trade. Booyah! Look at this. All right, so let's get into details of what we did today, or what we did on this trade. It was a little bit frustrating at first, way back here. You know, it broke this key support of 44.54, and we stopped out. From there, lack of follow through, re-entered the trade upon the break of the 88. Ideally, you would have, entered here on this reversal candle, this doji bottom reversal candle on a decreasing bear volume, but I wanted to see that break of the 88 on bull volume. So then we entered here. Then we grinded down on this lower trend line, and we held the GP. That was the gold signal. What happened here was price target upgrade to 70 bucks, and we saw gap up and run. Yesterday, slight consolidation on low bear volume. Then after hours, there's a couple things that happened. First is the first thing happened was the multi-year battery news that came out, and that caused a, let's look at the extended hours. That caused a spike, followed by a slight profit taking right at this resistance zone. Okay, and then this morning, the other thing that happened was the earnings report came out. Their revenue minus 0.06, or their earnings per share was minus 0.06. There is no revenue. However, they do have enough liquidity to last them into 2022, potentially even fund that first project. So that is partially or majority why that this ticker is looking very bullish now. Okay, I sold majority of my calls around on this candle somewhere, I can't remember. Let's see, gap up. Yep, I sold on that first candle. Upon gap ups, understand that gap ups are always for selling. Generally, you will find a better entry, such as yesterday, but I decided to not take it because I still have a decent sizing in it, just with comments. And then now with this, just to be safe, took another half off of the comments pre-market, and now we are seeing follow through. Ultimately, the target I'm looking at is still this gap fill right around that 84 area. So there is a lot of upside to this ticker, a lot of upside. Keep your eyes on it. All-time high at 132. We're only trading at 57. You know, risk to reward, the way I see it, very well worth it, even if you were to enter now. Next, and market's pulling back again. Not significantly, but we'll keep an eye on it. Next is SOS. Congrats, SOS bulls. 15, 25, 26% gap up right now. Congrats. These bull volumes for the last 3 days were a telltale sign. And this is the first gap up. Now we're seeing the second gap up. Look for that potential third gap up climax. So this ticker is not done yet. We are overbought. However, RSI oscillators should never be your only indicator. Watch for the divergences, especially in this kind of environment. Let's say if we were to turn on Bollinger Band. Okay, I don't have it. Let's do this. Bollinger Band just opening up. Okay. Generally, when you reach that Bollinger Band, outside of the Bollinger Band, you'll be looking at follow through of, I think the rule was about 20%. But in this case, I'm looking up a lot more. We are already seeing a 25%, 26% gap up. This ticker will go. There's no sign of volume climax yet. No divergences. So congrats to those that went in bull positions on SOS. Next one, PLTR. Hi, JJ. PLTR, surprisingly, it's a flat open. Okay, so this is interesting. Remember, yesterday's video, I said that, keep an eye on PLTR. I wanted to see how this ticker reacts to a lower open or further market consolidation, and we are seeing a relatively flat open. ARK has started buying this ticker, so that's another good sign for bullish. This is potentially a volume climax as well, but I wanted to give it another day to see where we head to. Let's take a look at the extended hours. Yeah, flat open. Bears don't seem to be done though, judging by the volume of closing hour yesterday. And still further bearish action this morning so far. There is now a bearish divergence or bullish divergence on extended. Personally, my preference is I would look for divergences without the extension, but this is ever so slightly bullish divergence right now, so keep an eye on it. This one will pay nicely when it starts to move. It's okay to be late on this one. You would rather be late than early because we are in the current downtrend. Could very well come back to backtest this trend line, and if we decide to drag it out here then backtest, the longer we drag it out, the lower the price is. Okay, so don't be early on this one. You'd rather be late. We're participating in the market to make money. That is our only goal. Okay, to make money. No, there's no point in calling tops or bottom. It's good if you get right. You know, it's a good feeling, but it doesn't matter if you're not making money. Okay. Next is, what do I have here? Hey, anyone got ticker requests? Feel free to throw them on, eh? Happy to review them for you. I think I had a ticker request from, bear with me guys, let me just check this here. From a YouTube comment yesterday. DG. Yeah, from a comment from DG yesterday to review BLNK. Let's take a look. BLNK. 7:13, mind the time. There is 15 minutes before the market opens. All right, BLNK. This is for you, DG. Broke under the trend line, key trend line to hold. We can see from back here, bounce, bounce, support again, and now we are seeing a very clear bearish, or the trend has changed to bearish. This is a lower high. Your must hold if you're in this trade as a bull, your must hold is 43.80. Now, when I talk about must holds, or generally I'm going to be referring to them as from a bullish standpoint, okay, just to make things easier. But yeah, your must hold is 43.80. Upon the break of 43.80, that is confirmation of the trend change to bearish, and risk to reward being a bull position, not worth it. Okay, look at the run that we've had from $7 to $64, 780% run in, oh, forgot to check the time, 61 trading days. Your risk to reward being in bull position is not worth it right now. There's a few telltale signs of bearish trend reversal into the bear favor. First, loss of this daily 8 on last Thursday, and a break under the trend line. Second, lack of a bounce on Friday, very low bearish, very low bull volume. And then yesterday, big candlestick closing at the low of day. Decent bear volume, not significant. If you look at all the previous volumes, not significant yet. But from here, what I'd be looking at, due to the lack of bull volume, likely to see an increasing bear volume from here. We could be reaching oversold conditions soon. So it's not extended from, not too far extended from the shorter time frame EMAs yet. It's getting extended on the hourly 8. Getting extended on the 4-hour 8. So upon a, let's say we continue to sell off at near this 83 zone, I would expect the bounce. It looks like there is a key previous resistance support area here as well. So we are right in that zone. We can see rejection, came down, broke over, breakout, fake out, rejection, rejection, support, rejection, support. And now this zone gives you an idea of, instead of waiting for a 43.80, this is a must hold zone. Upon the break of this zone between 46.84 to 48.48, you will be looking at further downside. All right, JJ, take a request. RLLCF. Rolls Royce. All right, Rolls Royce. Wow. This the car company? What a... Wow. Okay, this ticker is going to be hard to trade. I don't even know if you can call it a penny stock. It's a 0.004. You know, you put you buy 1,000 shares. This is what, $40? Is that math right? 1,000 shares. No, it's $4. Okay, so huge bull volume came in. Let's take a look at what happened the last time that there's big bull movement. Okay, watch for the upper ticks, or watch for the upper wicks. This should be a short-term trade. Okay. Slight upper wick. There is likely more upside to this trade. Increasing bull volume, nice pop from the last 2 days, last 2 trading sessions. So would expect further upside, but the upper wicks will be your guide. Already getting a little bit extended from the daily 8. So just remember, this should be a scalp trade. And yes, DG, Tesla is very likely heading lower. We have just broken under that 780 mark. Oh, wrong one. TLSA. Yeah, we have just broken under this must hold of 780. Now this is likely no longer a wedge. We'll be looking at this gap fill area down here in between 740.84 to 750.33. And let's take a look back at how market is doing. On the hourly, confirmation of loss of trend line, loss of GP, almost. This next hour, from now till 8 o'clock, is key. We're gonna need to see, ideally, a wick and just complete reversal, of course, but this is now confirmed. Why we saw so many red flags yesterday. Daily still looks okay. Ultimately, daily 8 is your guide. But based on the last 2 days price action and the lack of follow through from this all-time high break, we'll be looking at consolidation. Remember guys, we have ran since beginning of November. That brings us 75 trading days of bull action, 2.5 months, October 30th to February 16th. 2.5 months. Now, potentially, depending on where we're bouncing from, it's time to sit back, relax, enjoy those gains. Unless you want to play bearish, of course, make some profit on both ways. But my personal preference, I would be probably sitting back and relaxing a little bit. It's been a hectic last month, hectic February so far. Upon the break of this day 88, we would be looking down, first target 38.50. If we were to come back down to here, the triple confluence of GP, key trend line, as well as previous high support resistance zone, we'll be entering bullish position right here. All right, let's see if we have any more tickers. We got 9 minutes left. Anything interesting? CGC. Nope, flat open. Considering the market is not bad. TLRY, lower open. APHA, it's okay. Holding that 88. SNDL, opening below the 88, below the trend line. Red flag. Likely seeing more bearish action on this. Watch for that first 15-30 minute volume. Let's see what it looked like yesterday. 15-minute. Yeah, watch for a comparison to yesterday's open. I'm thinking it's going to be higher than yesterday's bear volume. Next, STPK. Flat open, relative strength, looking good. Bear divergence. If market pulls back further, I would imagine that they're going to take this chance to play out that bear divergence. BA. Backtesting support zone. PTON. Ooh. Okay, not much lower open. It's right at that top zone, top of the resistance support zone. It's not bad, considering the candle yesterday. So PTON is not bad. FSR lower now. Bull flag formation. Amazon, last I checked, was flat. Yep, flat open. So Amazon relative strength, but still not liking it. Gonna have to see ideally follow through increasing bull volume today. But given the market condition, unlikely to happen. Space flat. Bull volume outweighing bear volume so far. So potential for bull flag formation. Yeah, so weekly bull flag formation. Watch for this to form. So looking like it's a decent setup on space. Neo, lower open. I am considering cutting Neo position. Break under the trend line. Lack of follow through on this move up. So sometimes it's just the name of the game. This position has, I think we enter somewhere down here. Because it's an option position, we have gone from green to now slightly red. We'll be considering cutting this position. Next, BNGO. Oof. Opening at the open of yesterday. Still relatively strong. Lack of bull volume so far. SLV. Opening under the 88. AAL. It's not bad. Gonna want to see a follow through today. Nice increasing bull volume. Yes, the last 2 days. I think that's all the tickers we have. Let's go through yesterday's requested. Oh, COTY's looking nice. COTY is actually opening just right on that trend line of the long-term channel. So it's holding up really well comparing to the market. Watch for the volume. That spike of bear volume at the open yesterday, or no, I'm on a different time frame. February 9th, a little bit cause for concern. SPLK. Hey, good timing. 5 minutes left. Let's do this for you, DG. SPLK. Okay, so we didn't come back to the GP yet. Chart is still overall relatively should be in the bullish trend long-term wise, but this candle, cause of concern. Lack of bounce so far. Didn't even get to the GP on this gap down bounce. And now we're forming a wedge. So there's going to be a break soon on this name. Flat open, so that's a good sign. Lack of bull volume though. So lack of bull volume, bear volume is still there. Lots of red candles. Watch for a break on volume. Okay. Chart looks weak to me, but this wedge gives a chance for it to break bull. You want to watch for a break of either of these trend lines from the wedge on volume. So if you're looking for an entry, watch the shorter time frames for that volume to come in. But this wedge is gonna provide a move soon. All right, I think I'm gonna end it at that. Thanks for watching, guys. Thank you for your time. Thank you for taking the time to wake up early and participate. And thank you for all those of you that have subscribed to the channel. One thing I want to mention is we are so close to 100 subscribers. Come on, guys, we can do it. If you like the contents that I'm putting out, recommend it to your friends, family. If you're looking for that first pot of gold or get out of debt, make sure to like and subscribe to the channel. Thank you for watching the videos. Make sure to stay safe and be in control. I will see you guys on the next video.